But we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next.
Ladies and gentlemen, welcome back to Wealthion. My name is Chris Perkins. I'm the president of CoinFund, and today it's my honor to speak with Tom Lee, founder of Fundstrat and chairman of Bitmine Inversion Technologies. The largest ETH treasury in the world, Bitmine now owns 3% of ETH token supply. And Tom, that's 2/3 of the way to your 5% targeted goal, isn't it?
Yes, that's right. Our initial target, and not necessarily our long-term target, is to get 5% of the circulating supply of Ethereum.
Amazing. So I just saw you down at the Cantor conference, and you've had one heck of a presentation. You talked about how the Genius Act and even the SEC's Project Crypto is going to be as transformational to the financial services. And you made it, you drew similarities to Bretton Woods and the US dollar leaving the gold standard. And you said that this is going to be as big a catalyst. Can you unpack that a little bit when it comes to ETH and stablecoins?
Yes, I'd be glad to. For the listeners, in 1971 was when the U.S. formally withdrew from the gold standard, meaning the dollar was no longer redeemable for gold. And from that point forward, the U.S. and other countries, not every country went off the gold standard, basically said that from this point forward, a dollar is only exchangeable for another dollar. Okay, so the dollar became essentially synthetic relative to gold. And in 1971, many investors correctly bought gold because they said, well, that's the original store value. However, the second reality is that we had to suddenly protect the dollar to make sure it was going to be the world's reserve currency, because if that was no longer exchangeable for gold, then a country that was still in the gold standard could become the new reserve currency. So what happened? Wall Street built a bunch of new products to make sure that the dollar became the accepted standard. And over that ensuing 10-year period, it was money market funds were created, CDs, futures, ETFs, and it was successful because the dollar remained the global reserve currency. And today, it's now 80% of all financial trading pairs. In 2025, there is a similar evolution taking place, and it really started with stablecoins, which is that the dollar, which was already now synthetic, became tokenized on the blockchain. So now the dollar is now digitally represented, and that's what a stablecoin is, because it's backed by treasuries, but it's still basically just a digital dollar. That is going to be creating the roadmap for a lot of other assets to become digital tokenized on a blockchain. And it's a big deal. We know that in crypto, for instance, the projects that have actually emerged from as native blockchain products have actually been better mousetraps. And that's something that is driving and sending Wall Street to build. The first of these has been the stablecoin and Tether. And Tether, as an entity now, it's valued, and they're raising at what is reported to be $500 billion. That would make it the second most valuable bank in the world. And even if it ends up raising at 400 billion or 300, whatever that number is, they're still the second most valuable bank in the world after JP Morgan, which is 869 billion. So a company that has today maybe 300 full-time equivalent employees is almost as valuable as a bank like JP Morgan has 313,000 employees. So there's a lot happening. There's a lot of benefits that come from tokenization, and I think that that's the big unlock that's coming.
Yeah, totally. We're a fiduciary, and I know you're close with my partner, Seth. We talk about this all the time. As fiduciaries, I think the equity markets globally have about 127 trillion in market cap. I think fixed income is about 150 trillion. But as a fiduciary, given the option and if liquidity was the same, I always have to buy the token rather than the legacy fiat instrument because I can manage my risk on weekends and nights. And so I've always been of the opinion, slow, then all at once, everything has to tokenize because I need to trade it. How do you agree with that thesis? Do you think that's how it's going to play out? And what does that mean? There's plenty of blockchains. Obviously you are drawn to Ethereum. Would like to start getting into that as well.
Yeah, I agree with you, Chris. It is when something becomes native digital, it works really well. I mean, there's many examples. I mean, for instance, crypto trading 24/7 is an example, but look at how we do all communications. It is all native digital now. I mean, emails are digital or, messaging. And in fact, over the last 10 years, I think it's a low estimate to say that at least 50% of all GDP growth in the last 10 years is native digital. It's probably now close to 60%. In the next 10 years, it's probably going to be 70%. So increasingly, almost all innovation and growth is native digital. And yet we're using geographically defined currencies, and we're trading instruments only 5 days a week with specific market hours, even though during those market hours, 99% of all the trading is already electronic anyways. I think one of the challenges as we tokenize is, of course, going to be making sure there's still the same liquidity that's available, because we know one of the glitches in crypto is liquidity is not universal. And so we do want to make sure prices are correctly reflecting a deep and full market whenever we see a price posted. But that's, of course, software. I mean, someone can define prices correct or put limits on price change if necessary.
100%. I remember back in futures markets where I come from, bunds electronified overnight and liquidity migrated, over to Eurex. And so I think that phenomenon is definitely going to happen once again in our space. All right, so let's talk about Ethereum. You've talked about Ethereum entering a super cycle. You talk about stablecoins, as we mentioned, being that chat GPT moment. You've made a 60K call on ETH. But right now, the market seems to be thinking about things differently. We've seen it pull back, ETH pull back under 3K. Personally, I think it's a great entry point. Why do you think this disconnect for something that is so obvious to you, pretty obvious to me? Why are we trading as we're trading right now with Ethereum?
Yeah. Well, Ethereum and Bitcoin are public tokens. And so their price isn't going to be purely anchored on fundamentals. They're going to be reflecting investors' perceptions, because both Bitcoin and Ethereum are not mature platforms. Their best utility and growth and innovation are in the years ahead, right? So we're 10 years in, but there's more growth in the future. The percentage of market share of crypto of total assets is so small that we know that mathematically that's true. Whenever when you have something that has a hyper growth on ramp and you're discounting the future, it's going to be very volatile. So does Ethereum's price going from 4,800 to 2,800, I mean, that is a staggering decline, but that probably is a minor change in 2030 fundamentals that is being priced and repriced by investors. And that's why there's hyper volatility. It's one reason why Bitmine ended up engaging Tom DeMark as a strategic advisor, because he is the king of sort of price discovery. He is the father of systematic timing. And in our conversations, when he looks at Ethereum, he sees what looks like engineered or systematic liquidation taking place. So there is someone that is in crypto, we know it's market makers play a big role, but there's someone that is probably capital constrained and is therefore bleeding or having to sell reflexively as price falls. That process is painful, but in his sort of rough timing range, his downside target, and we talked about this a few weeks ago, was 2,500 for ETH. So I think we're so close to that. It would be ideal actually for us to actually bleed to that level, because then that is creating what he calls a buy setup. A bottom in prices for him is when the last seller has sold, so that a stock or crypto no longer falls on bad news. I mean, that's what he thinks makes a bottom. So it would, I think, be a better situation to see crypto prices bleed lower to 2,500. But it could reverse at any time, because markets don't have to do what ends up being an ideal scenario.
Yeah, so I think you've talked about this, and we've identified it. There was a terrible market crash in crypto, and 1010 as we call it. Some crappy pricing, issues with feeds, a couple of other reasons, low liquidity. It led to this material auto deleveraging, as we call it, which I think some market makers, market neutral players were definitely caught off sides. And so I think what you're describing is this systematic selling. Is it all related really to that idiosyncratic event of 1010?
I mean, I'd say if someone wanted to say, why did crypto diverge from equities?
Yeah.
That's, I think, a big role, because they're in the past 6 weeks, nothing has actually fundamentally explained why crypto should be underperforming risk assets. Because the S&P, of course, has had a drawdown, but the S&P continued to rise for another 20 days. The S&P didn't peak till the 29th. So that divergence has to reflect either a change in how market function in crypto, or was there an existential new risk? I mean, the only new existential risk would be like if quantum innovations came along, but there hasn't been that. So,
you think it's existential or just idiosyncratic? I mean, nothing seems existential here to me.
Well, I mean, Chris, the one thing that I would say that maybe isn't reflected in price is the number of account holders that got wiped out on October 10th. And I think and we may not even hear from them because, they've been liquidated. I think to me, that's probably, now that could be someone's simply saying there was just too much leverage. That's why leverage is hitting crypto harder. I mean, that's a possible explanation. But to me, again, especially working with DeMark team, I think that there is something that is causing a lot continued leaking, but we're close to the end of that leaking.
Yeah. My sense is that we're going through a flippening right now. And it's not the traditional flippening of ETH market cap surpassing Bitcoin. It's, to your point, it's the retail got hit. Retail ebbs and flows. Retail's ebbing right now. But the real flippening is that institutions are coming back into the market. And I think Bitmine and others are going to be a big part of making that happen. And so, I personally think you have this kind of this gap period, but I guess we shall see. Wanted to get back into your Ethereum core thesis, and as you're going around now talking to investors around the world, Bitcoin has been pretty easy to explain. It's digital gold. One of the things you spoke about was that 10 years. And to me, that's the starting line. When I was in traditional markets, I would need 10 years of risk before I could get into anything. How do you tell the Ethereum story, and how has it evolved, as you started to have these conversations?
Yeah. Well, I think you're spot on, Chris. Like when someone says, what is Bitcoin? I think everyone really accepts it as it's a store of value, a really good way to store value. And that's accepted today. In fact, someone might say that's like a Lindy effect, that people believe that. When we first started writing about Bitcoin in 2017, and digital gold was one way to sort of argue Bitcoin's value, it was not accepted because many people said, well, come on. I mean, it's just code. I mean, how can code store value? Or why can't there be 100 Bitcoins? Or look, I could create a new Bitcoin tomorrow, or I could fork Bitcoin and create a new Bitcoin, or I can't buy. I remember one client saying they couldn't buy a bottle of water with Bitcoin, so how could it even be valuable? So, but of course, all those arguments fell away. And now we have digital gold, Bitcoin, store of value. Even as gold gets tokenized, which I think will compete with Bitcoin to an extent, you still have Bitcoin, which is a really good way to store and transfer value. But Wall Street is also understanding there are a lot of virtues to a blockchain. And it's the ability to not only store value, but to store information and to actually transact and conduct and actually re-architect almost everything that Wall Street does. But they need a smart contract platform. And so that's where all these other L1s start to become a lot more important to Wall Street's future. Because if the big banks, the blue chips, build stablecoins and they're going to tokenize stocks and let stocks trade 24/7, and then innovate that too, which I discussed at the Cantor, which is like things like factorize a stock. So no, just like in the bond market where you can factor a bond, we can factor Tesla so that you're only buying the implied future value of Optimus Prime. So instead of asking Tesla to make itself a tracking stock, you can synthetically create that on the blockchain. So you can't really do that on Bitcoin. So you have to build it on a smart contract, L1 or L2. And the reason I think Ethereum is going to be one of the leading platforms is, number one, its sheer size. It is by far much bigger than the number 2 or number 3 L1s. It has a huge and growing developer community that is really dedicated, and it's global. So I think it's a true, robust community with actual known values. And it's a neutral blockchain with 100% uptime. So I think that this becomes one place where it's going to be easier for people to create innovative products. So for instance, let's say JP Morgan or Goldman want to just do tokenized stocks in 24/7. And they want to control as much of that as they want, as they can on a blockchain, because you lose a bit of control. They may not necessarily say they want to do a lot of this on Ethereum, but then someone's going to come along and create a product that does do this, and it's supported by a community, and then it gathers all the liquidity. That's exactly what happened with something like Polymarket, right? On a prediction market basis, where it came natively out of the blockchain and today broke out into the real world and it's the most cited way to actually understand events in the future. I mean, it's the Polymarket is the closest to having a crystal ball today. Like it is the closest to tomorrow's newspaper, and it's a native blockchain product. It didn't come out of an existing Wall Street desk that created this product. It was created by builders. So that's why I think Ethereum, and it doesn't have to be only Ethereum succeeding. I think Ethereum, there will be room for others, but I can see the clearest roadmap for Ethereum succeeding.
Yeah, on Polymarket, man, I've been watching it like crazy. It's just such good information to have, and I think a lot of bullishness is going to happen with Mike Selig now as future chairman of the CFTC, being able to normalize those markets. On the bank side, I don't think a lot of people saw this, but I'm an ex-banker. Basel really drives bank behavior. And the fact that even Basel's now saying, I think we got it wrong with the stablecoin thing. We're actually going to we're going to make these capital rules more favorable. We have to rethink them for public blockchains like Ethereum. I think that's going to be a humongous unlock. Anyway, wanted to get to the DAT story. And, I've been a big proponent of DATs. I think that they're going to be a really important interface for these ecosystems, being able to access public equity markets. But there are a lot of haters out there. They don't see the value. You are chairman of the second largest DAT in the world, the largest in Ethereum. How do you address those haters? What's the value that DATs bring?
Yeah, Chris, I think DATs are becoming an asset class. But the market is skeptical, as you said. The reason they're skeptical is that there are so many DATs that it's not clear what differentiates each strategy of a DAT. So I think maybe to level set, I could explain MicroStrategy and Bitmine, and they're pursuing different strategies. MicroStrategy has 3% of the Bitcoin network. They've become so important that I do think that they have what I call a sovereign put. We know sovereign funds are buying a lot of Bitcoin. They continue to buy it. So as much as Bitcoin has languished, it's really, as you know, shifted hands to basically large holders now. And MicroStrategy owns so much Bitcoin that if the US government ever needed to buy 10% or whatever size of the Bitcoin reserve they want, MicroStrategy represents a very easy way to get 3% of that. So I think that they have endurance that way. And then they've been very clever about essentially productizing their balance sheet and monetizing Bitcoin's volatility and its future price appreciation with all their various products. Now, Bitmine also owns 3% of Ethereum. So we are similarly scaled to MicroStrategy, but pursuing a very different strategy at the moment, which is Bitmine knows that there is infinite future innovation in front of Ethereum, because Ethereum and the Ethereum Foundation have really shifted to becoming a lot more friendly to financial innovation and products. Even Vitalik thinks that's, because he's pro-user. But Ethereum needs bridges between Wall Street and the developer community and the DeFi community, and really defining parameters and identifying projects and prioritizations and even alliances. And that's where Bitmine, with 3% of the Ethereum network, is essentially, in a way, becoming part of that bridge. We are really trying to align ourselves very closely with the Ethereum Foundation and a lot of developers, but also acting as that conduit and idea generator for Wall Street. So that's how we're trying to accomplish this as a DApp. But of course, you should stay tuned, because that means by necessity, we're going to have to also spawn and create additional businesses to support all those functions. And I think that's why Bitmine and MicroStrategy have a clearly defined idea that there's a power law at play. And then as you start to become more reflexive with the community itself, you're going to be creating other opportunities and productizations. Of course, we don't really reveal things that we do before we do them.
Yeah, for sure.
So that's, and then I think the other DATs have to really also then ask themselves, are they scale players on their own? The good news is that within Solana and Ethereum, because of the native yield, the companies the DATs that have raised enough Ethereum can probably have viability if they're not going to grow their ETH holdings.
If you're looking for a simple, secure way to invest and own physical gold and silver, visit our sister company, Hard Assets Alliance, at hardassetsalliance.com. That's hardassetsalliance.com.
Yeah, so on that, you just announced the Made in America Validator Network, which is good. It seems like it's going to be core to your operating company. Is that going to be one of your core businesses?
It remains to be seen. I think, but it's an example of how Bitmine operates, because we were looking at staking solutions, and we sent out RFPs to almost every major staking provider. We did comprehensive audit and review, and we selected 4 really initial partners. We haven't named them yet, but then these 4 are going to help us actually create the Maven staking network. And it's because we want to have a best-in-class solution, but it's also OFAC friendly U.S. Treasury friendly, Wall Street friendly. But it's an example of how we're trying to create standards that are really not. We're not trying to optimize for like time to market, right? We're pretty slow to announce a staking solution.
Yeah.
But we wanted to be really thoughtful about it. And of course, we also wanted to make sure we weren't going to have a negative impact on the staking, on actual staking itself.
Yeah.
Because, with 3.6 million Ethereum, I mean, it's a huge amount of ETH to move.
Yeah, 100%. But that should drive some nice sustainable yield, probably around 3%. You also made a strategic investment in Orbs or 8Co, which is the WorldCoin DAT. I think it was like a $38 million stake. Can you explain how that ties into your overall thesis?
Yes. Yeah, and Bitmine made a $20 million investment in Orbs, but in 8Co, which is the ticker Orbs.
Yeah.
But WorldCoin, I think, is actually one of the really most unique projects out there. Now, for those who aren't familiar with what World does, World is offers proof of human verification. Okay, and the way they do it involves a lot of proprietary technology that really works. They are essentially scanning someone's iris, not storing your iris. They're not storing your biometric information, so you don't have to worry about Big Brother or surveillance on chain, because they're doing a cryptographic hash of your iris. So all they're doing is uniquely recording that you have an iris that no one else has. And that's really important because we know that in this world that's becoming increasingly digital, it's harder to verify our own humanity, but also verify that it is us. Whether it's voice or deep fakes, and especially in an increasingly agentic world where there's going to be autonomous agents and even robots, I think it's going to be important. So World is one of the few real solutions out there. And so the token, of course, is the token of the World technology. And so it's an ERC20, it runs on Ethereum. So to us, that's a really important project, something that we want to support. And the way we can support that, of course, is to invest in a treasury, a WorldCoin treasury, which is the ticker Orbs.
Love it. Yeah, big fans of that project as well. Tom, so you have Maven, you're doing strategic investments, and it sounds like you've got plans that you can't really talk about. You also announced recently a dividend. Can you talk us through that calculus?
Yeah, glad to. We announced an annual dividend, and it's an operating dividend of $0.01 per share. Now, it reflects Bitmine's commitment to focus on shareholder return, and this is a dividend. It's going to represent a payout that's less than 1% of expected earnings. So, of course, it's sustainable. It doesn't require borrowing any money to pay the dividend. But it also is unique because if we look at the world of large cap crypto stocks, we are the only company that's over $9 billion of market cap, or even $5 billion, that's paying a dividend. In the future institutional world, paying a dividend is not only a sign of stability. NVIDIA pays a dividend. In fact, roughly half of the Mag 7 AI stocks pay a dividend. But it does allow you to also be owned by core funds and income-oriented funds as well.
Love it. And the other differentiation I would suggest is just your sheer volume. Today, Bitmine's the 50th most traded stock in the US. I think it's trading 1.6 billion per day. That seems like, as you're moving into the institutional space, something that's very important. Can you unpack that?
Yeah, and Bitmine really does benefit from a stock that trades really actively. Even this morning, we're trading about the same volume as, basically as Palo Alto Networks. I'm just taking a look at it now. So we trade like a large cap tech stock, and we also have really high volatility. The implied volatility of Ethereum is already quite high. It's more than twice that of Bitcoin, but the implied volatility of Bitmine is super high. So it attracts a whole class of not only individual investors, but it does attract a lot of high frequency traders because volatility and using our options chain makes it very attractive. And there have even been leveraged ETFs created. I think there's 2 leveraged ETFs created for Bitmine. And at some point, it is attractive to actually try to monetize that volatility. MicroStrategy did that by doing a series of huge convertible offerings. It ended up, being a meaningful percentage of how they raise capital. So it's a future option for Bitmine, but for now, we would prefer to keep the company's balance sheet super clean. Again, a company is just straight equity funded.
Yeah. So I wanted to get into MNAVs really quick. And right now, the entire DAT space is pretty much, most DATs have an MNAV below 1, meaning that the price, the market capitalization of the stock is less than the value of the underlying crypto. It kind of puts DATs in a difficult position because it's not a great time to issue new equity to buy tokens. How do you navigate this situation where the MNAV drops less than 1?
Yeah. Well, if a company has their MNAV below 1, they do have a few options, but it is a lot of it is essentially a situation that is not always entirely in the hands of a company, because when something trades below 1 MNAV, it reflects pessimism about the future, an element of the future of that company. For instance, it could be trading at a discount to MNAV because the company has an expense structure that's too high.
Yep.
So I think there are several DATs where their asset management fees are really high.
Yeah.
A really well structured DAT should have an asset that custody and management fee should be below that of an ETF.
Yep.
And ETFs are 44 basis points, so that's like what your fee should target. The second is that's the market could be very skeptical of the prospects of that crypto itself, because a stock is a discount to the future, and then a crypto token is a discount to the future. So the stock, in theory, is going to be signaling price expectations about the crypto, maybe even before the crypto does. In fact, that's why if someone's trying to figure out when Bitcoin bottoms, they're actually better off watching MicroStrategy. Mm-hmm. MicroStrategy turned down first before Bitcoin rolled over, and MicroStrategy stock will bottom before Bitcoin bottoms. So if a company is in the position of trading below NAV and they're viable, so let's say they have enough ETH and they actually generate yield, they know that they aren't going out of business, so they don't need to raise money. But they also can't necessarily raise money using equity. Okay, so if that DAT wants to grow, they have to do a non-equity instrument to grow. So that's one solution. If they want their equity price to recover, then they have to convince the market of 2 things, or 3 things really, or all 3, one of 3 or all 3. One is they have to convince the market that they are a viable steward of capital. And if their expense structure is too high, they have to right-size their expenses. Then they have to, secondly, convince markets that they are shareholder friendly. And that either means, a roadmap to what they're actually doing, and it shouldn't be maximizing staking yield, because, I think that makes investors nervous, because there's no such thing as a free lunch.
Yeah.
and but it could be a shareholder return plan. But if they are a small company and they're not growing, that is a really tricky spot to be in. Like if you're sub $1 billion, that's a wasteland in the equity world, as you know, Chris. Like you come from traditional markets, like sub $1 billion, like there's a gajillion companies.
Yeah.
You need to be closer to 10 billion. So the third is that they have to take action, and either they can try to consolidate with each other to get bigger.
Yeah.
They could convert to an ETF. So become an investment company and then convert to an ETF, and suddenly they won't trade at a discount. They could start dividending all their yield, and if they're right sized on expenses, that works too. But a proper DAT like MicroStrategy and Bitmine, they're not trying to just be stable with their holdings. They're trying to grow accretively their crypto holdings per share. And even MicroStrategy has managed to raise a couple $1 billion in the past month.
Yeah, I think the DATs that are well managed and expect for these days to come. I mean, we've been in finance forever. You always end up in the tail. Something always happens, and you need to be prepared. So the folks who can weather this storm, I think, are going to be really well positioned. So how long do you think, Tom, until M&A really hits this space? I mean, it seems as though those companies you're talking about that didn't quite make it, it's going to be M&A season here in the DAT space. You think that's on the horizon?
Yeah, it has to be, Chris. So, the DATs, the fact that there's a lot of DATs flailing doesn't surprise me because that's capitalism. Today there's only 3,000 listed stocks. Well, 3,500, right? Or I don't know, 42. I mean, Wilshire 5,000 is no longer 5,000 stocks, but there's been like more than 45,000 IPOs and spinoffs since 1970. In fact, that stat I'm citing ended at 2015. So there's probably close to 55,000. And in our study that we did at Fundstrat, 90% of IPOs and spinoffs fell 90%. And of those, half of them went to zero. So meaning most companies fail. And so what we're seeing in DAT world, just like in crypto, is that this Darwinian process is happening very quickly. But in order for mergers to happen, it's the seller has to become realistic. That's, I think, the problem, because a seller would say, well, in June, I was just at this price. Why do I have to sell now? So I think that's the sobering of that process is probably what's holding up M&A, because of course there's plenty of buyers out there. But one of the tricky things is, someone who's trading at a premium to NAV is not going to want to pay a premium to NAV of another company.
Yeah, 100%.
Trading at 0.7 because that's offering a massive premium. So it's really just the bid ask is probably the biggest impediment.
We have the Fed coming up. It looks like they're now going to cut after they weren't sure. Now it looks like they're going to cut. I'm tracking Polymarket, but how do you see this macro setup? It looks like sentiment is terrible right now in the space. Macro seems to be kind of getting better when it comes to the rates outlook. I would say medium to long term between regulatory de-risking. It's actually a really good setup for DATs, particularly where the MNAVs are right now. It's really my last question here is how do you see macro impacting you in the space?
Macro is actually really a big deal, Chris. Crypto was the first really to sniff out and it's going to be responding to a Fed, right? And if the Fed's remains hawkish and executes policy error, that's bad for crypto prices. That's why it's really important for anyone involved in crypto to understand that what the Fed's going to do is a big deal. I think the Fed is in a very difficult spot because if there wasn't what looks to be as political interference, I think the Fed would be cutting without question now, because bond market is showing future inflation expectations are falling. And that means that if monetary policy doesn't adjust, its real rates are getting tighter. We're actually putting more tightening into the economy. But as you know, the Fed has to make sure its actions don't look like they've been politically driven.
Yeah.
And that, not just the market's perception, right? Because people tend to think of it as, oh, well, this is the bond market or stock market's conclusion. That's not really what I think that what the Fed's concerned about. It's really the integrity of the organization. You know, they have 30,000 or more employees, and each of them is seeing this relentless attack from the White House. So I think to the extent that the Fed governors and the voting members know that it's the morale of the institution that's at stake. So this is why the Fed is even more guarded in their actions and much more deliberate in their messaging, because they don't want anything they do to look politically motivated. And unfortunately, that's been bad for markets, because the markets have interpreted that as the Fed is hawkish. And I mean, they do sound hawkish. So I think it means that there's going to be an alignment later months when inflation is fallen enough and the Fed can now make cuts where it's no longer viewed as politically motivated.
Right. So they need a little more overhead cover. Awesome. Really appreciate it. Any last thoughts, Tom, before we let you go and get back after it?
Well, you know, it's just I think for anyone who's involved in crypto for a long time knows this, and so there's many who are new, but crypto has declines, and we're not necessarily in a bear market, and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves.
Yeah, you have the meltdown, then you have the melt up. Volatility works in both directions. Before I let you go, any price targets for ETH?
Yeah, I think, well, in the near term, you know, there is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.
I hope you're right, sir. That would be music to my ears. Really, really appreciate you coming on, and I learned a ton today. Ladies and gentlemen, Tom Lee, founder of Fundstrat and the chairman of Bitmine. Thanks again, Tom.
Thanks, Chris.
Really appreciate it.
Don't forget to sign up for a free portfolio review with one of our endorsed investment partners at wealthion.com/free. With markets hitting all-time highs, now is a great time to stress test your strategy and be prepared for what comes next. Thank you all for watching. We'll see you again next time.